Hello and welcome back to our channel. Today, we're going to be talking about the safest investment you can make. Now, when it comes to investing, there's always some degree of risk involved. But if you're looking for an investment that's relatively low risk and has a good chance of providing a decent return, there's one option that stands out above the rest: bonds. Bonds are essentially loans that you give to governments or companies. Bonds are financial instruments that allow governments and companies to borrow money from investors. When you buy a bond, you're essentially lending your money to the bond issuer, and in return, they promise to pay you back the original amount plus interest at a later date. Bonds are a way for governments and companies to raise money for various purposes, such as funding public projects or expanding their businesses. The bond market is a large and complex part of the global financial system, with a wide range of different types of bonds available for investors to choose from. Some of the most common types of bonds include government bonds, corporate bonds, municipal bonds, and high-yield bonds. Government bonds are issued by national governments, and they're generally considered to be among the safest investments you can make. This is because governments are typically considered to be less likely to default on their debts than companies, and they have the power to levy taxes and print money to pay off their debts if necessary. Government bonds can be issued for a variety of different lengths of time, from short-term bills to long-term bonds that mature in 30 years or more. Corporate bonds, on the other hand, are issued by companies to raise money for various purposes, such as financing new projects or expanding their operations. These bonds are generally riskier than government bonds, since companies are more likely to default on their debts than governments. However, corporate bonds also tend to offer higher interest rates than government bonds, since investors are taking on more risk. Municipal bonds are similar to government bonds, but they're issued by state and local governments instead of national governments. These bonds are often used to fund public projects like roads, schools, and hospitals, and they're generally considered to be relatively safe investments. Finally, high-yield bonds are bonds that are issued by companies with lower credit ratings. These bonds offer higher interest rates than other types of bonds, but they're also much riskier, since the companies that issue them are more likely to default on their debts. So why are bonds a relatively safe investment? Well, for starters, bonds are generally considered a relatively safe investment because they are debt securities that offer a fixed rate of return, a predetermined maturity date, and are typically issued by entities with a strong credit rating, such as governments, municipalities, and corporations. When you invest in a bond, you're essentially lending money to the bond issuer for a set period of time. The bond issuer agrees to pay you back the initial amount you invested, known as the principal or face value, plus a fixed rate of interest over the life of the bond. Because the interest rate is predetermined at the time of issuance, the investor knows exactly how much they will earn from the bond. One of the reasons bonds are considered a relatively safe investment is because they are generally less volatile than other types of investments, such as stocks. The value of a bond typically fluctuates less than the value of a stock, especially in times of economic uncertainty. As a result, bonds are often seen as a more stable and predictable source of income. Another reason bonds are considered a safe investment is that they have a predetermined maturity date. This means that the investor knows exactly when they will receive their principal back. As long as the bond issuer does not default on their debt, the investor is guaranteed to receive the full amount of their initial investment back. This provides a degree of security that is not always present in other types of investments. In addition to their relative stability and predictability, bonds are also typically issued by entities with a strong credit rating. This means that the bond issuer is seen as a reliable borrower with a low risk of default. For example, when you invest in a government bond, you are essentially lending money to the government, which is typically considered a very safe bet. Similarly, when you invest in a corporate bond issued by a well-established and financially stable company, you can be relatively confident that the company will be able to pay back its debt. Of course, no investment is completely without risk, and bonds are no exception. Even a bond issued by a reliable issuer can still default if the issuer's financial situation deteriorates significantly. Additionally, if interest rates rise after you've invested in a bond, the value of your bond may decrease, since investors will be able to get a higher interest rate elsewhere. However, overall, bonds are generally seen as a relatively safe investment due to their stability, predictability, and the creditworthiness of the issuers. So, if you're looking for a relatively safe investment option that can still provide a decent return, bonds are definitely worth considering. Bonds are one of the most popular investment options for investors who are looking for a relatively safe and stable way to grow their wealth. Here's a more detailed explanation of why bonds can be a good investment choice for those seeking a combination of safety and returns. First, let's talk about what bonds are. In simple terms, bonds are debt securities that are issued by governments, municipalities, corporations, and other entities in order to raise capital, When you buy a bond, you're essentially loaning money to the bond issuer, and in return, they agree to pay you interest on the loan over a set period of time, usually ranging from a few months to several years. At the end of the bond term, you'll receive your original investment back, along with any interest that's accrued. So why are bonds considered a safe investment? One of the biggest reasons is that bonds are generally considered to be less volatile than stocks. The value of a bond is typically tied to interest rates, which tend to move more slowly and predictably than the stock market. Additionally, bonds are generally less sensitive to market fluctuations and economic downturns, which can make them a good way to balance out the risk in a portfolio that includes more volatile assets like stocks. Another reason that bonds are considered a safe investment option is that they offer a predictable stream of income. Unlike stocks, which typically don't pay dividends, bonds pay interest on a regular schedule, providing investors with a reliable source of income. This can be particularly attractive for retirees or other investors who are looking to generate income from their investments without taking on a lot of risk. But what about returns? While bonds may be a safe investment option, some investors may be concerned that they don't offer the same potential for growth as stocks or other more aggressive investments. While it's true that bonds generally offer lower returns than stocks, they can still provide a decent rate of return, especially when interest rates are high. The exact rate of return you'll receive will depend on a number of factors, including the creditworthiness of the issuer, the length of the bond term, and the prevailing interest rate environment. So, are bonds a good investment option for you? As with any investment, it depends on your individual financial goals and risk tolerance. If you're looking for a relatively safe way to grow your wealth over time, while still generating a predictable stream of income, then bonds may be a good choice. Just be sure to do your research and choose issuers with strong credit ratings and a good track record of paying their debts, and keep in mind that bonds are still subject to some degree of risk. In summary, while bonds may not be the most exciting investment option out there, they can be a great choice for those seeking a combination of safety and returns. With their predictable income stream, lower volatility, and potential for decent returns, bonds can be an important component of a well-diversified investment portfolio. That's all for today's video. Thanks for watching, and we'll see you in the next one.